This is Greg Mikulowski from FXDD, and this is a Friday, March 19, 2010 Weekend Forex Report exclusively for FX Streets. Let me remind everybody that trading foreign exchange is risky and it should only be done with risk capital, not change your lifestyle. FXD does not guarantee any recommendations made within this commentary. Traders should make these market assessments and take trading positions based on your own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Customers can lose all of their margin in their account, although care was taken in creating this report. FXD does not guarantee the accuracy of the information. Well, on Friday, what we typically do is take a look at the markets in the major currency pairs and take a look at the daily and the hourly charts to get a bias toward one way or the other as far as the bullishness or the bearishness of the different currency pairs. So without that, any further ado, let's go into the market because I'd have a lot to say in a little bit of time. One thing, taking a look at the euro versus US dollar, we had basically 4 days to the downside, 1 day to the upside. That day to the upside occurred on Tuesday, and then on Wednesday we went up to new highs at 138.17, falling short of what was our resistance or our target level on the top side, 138.73. Also, we're looking at this 138.52 level, which was a low going back here to the end of beginning of February. So the market fell short, only reaching a high of 138.72, and then starting its move back down to the downside here, and rather sharp move to the downside. As it was, we went all the way down to 135.03. So that's a good chunk of change to the downside in a short period of time, and moves a bias back to the downside for this currency pair. Why? Because we did break through this trend line here. This trend line held 1, 2, 3, and then broke through that level. And today we went up and kind of tested the bottom side of it, but could not move above that, and then it started to move back to the downside. Now we did close the week at 135.36. That's off the lows that occurred at 135.03, but still the damage was done to the downside. So we'll be watching the move to the downside for that currency pair. Perhaps we head on down and test these 1, 2, 3 lows that occur between 134.37 and 134.51. We had a low of 134.44, 51, and 37 here. The last one was the lowest of them, and that caused a help move to the top side here on the March 2nd. That was the day that the market bottomed. Now let's take a look at the hourly chart. And what we see here on the hourly chart is the market move down to a low of 135.03. One of the things that we did do was reach a target level, 135.13 level on the downside. What is the importance of that level? Well, if you go back to March 2nd, I mentioned that that was the low that we reached in the currency pair. That was that occurred at the 37 level on this bar right here. But prior to that, the market found support here at 135.13, 135.13, 135.13 break. Boom. One bar to the downside, one bar back up to the upside, break above the 13 level. What do we come down to? 13 level, and move to the upside. From that point on, the market started marching to the higher level for that currency pair, reaching a high of 138.17 here. Now today we get to today, and what happens? The market gets back down to the 13 level, and we find the support down here against the 13 level. So next week, key level 135.13. Keep that level in mind. Market's able to get through that level, then I think we should continue to the downside for that for the euro versus US dollar. Maybe get down to those levels that some people are talking about on a long-term perspective, like 132, maybe 128, stuff like that. Wall Street Journal even said parity for the euro versus dollar at some point. Who knows? The sterling versus US dollar on a daily chart. We stayed above this trend line here, taking the bottoms, and that trend line currently comes in at the 149.48 level on the current bar. The low for the day came in at 149.87, so we'll be watching this 149. 58 level next week. It's probably going to be a little bit higher on Monday's bar. So that will be our support on the downside. If the market is able to get through that level in the sterling versus US dollar, we should see further downside momentum. From a daily perspective, we're obviously well below the 100 and the 200 bar moving average here. We've from a retracement perspective, if you take the high from 2009, which occurred here at 164.56, to the low that occurred at 147.82, the correction up here fell short about 40 pips short of the 38.2% retracement. So just like the euro, we did fall short of that target to the upside and started to move to the downside, which increases kind of the bullish bearish bias to the for the sterling versus US dollar. Taking a look at the hourly chart, you can see the bearishness in this chart as well. We broke through the 100-hour moving average right here. That's the blue line in the chart. We broke through the 200-bar moving average right here. That's the green line in the chart. Also broke through the 38.2%. Well, actually, that's of the move up, but we broke through the 50% retracement of, well, don't even know what these levels are. So ignore that, but we did break through this trend line here of the of these two lows right here, which propelled the market to the downside all the way down to the 149.87 level. Note here that the low here on this day also was tested. This low from March 16th came in at 149.77. The low came in at 149.87, so within 10 pips of that, the market started its little corrective move to the upside here in the sterling versus US dollar. But going into next week, we're going to be watching this 78, 77 level here on the downside. The market able to get through that level, then we should see further downside pressure for the sterling versus US dollar. Let's go to dollar versus Swiss. This is an interesting currency pair because it's part of the Euro Swiss, and the Euro Swiss had an interesting week as well. But taking a look at just this chart right here, we came down and tested the 200-day moving average. Got within about 10 or 15 pips of that, and then started to move back up to the upside. Corrective move to the upside. That's a positive sign, bouncing off the 200-day moving average for the dollar versus Swiss. Gives it a little bit of a positive bias. But looking at the hourly chart, what do we see here? We do see that the market broke through what is our key 100-day moving average here. That's the blue line in the chart. Also, this moving average is starting to move sideways. It suggests maybe the downtrend is over and the market might look to correct to the upside. And we start to look for the 200-hour moving average in the chart, and lo and behold, on 2 days here, 1, 2, the market did go up to that 200-hour moving average, but each of the time it fell short. We are now in between our goalposts. We are in between the 200-hour moving average. That 200-hour moving average comes in at the 106.28 level. The 100-hour moving average comes in at 105.24. We'll be watching those two levels. We're right in between those two levels right as we speak. So either the market is going to stay within this range right here, or break to the upside, or break to the downside. We don't know which way one, but you have basically three choices here. One, we sell against the highs here, buy against the lows here, and look for a break with the stops, and look for momentum in the downside, either upside there. And we can head to these retracement levels, like the 50% retracement of the move down, or the 61.8, or we can head down to checking out the lows here and checking out that 200-day moving average down on the downside for the dollar versus Swiss. I mentioned the Euro Swiss. The Euro Swiss, from a hourly perspective, boom, 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 has been going down. This is after the Swiss National Bank meeting, where they said, okay, I'll let the Euro Swiss continue to float, basically, and we went from 146.30 all the way down, boom, 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 and gain momentum on a couple days here this week. The central bank banker said, get ready for higher rates, get ready for a floating currency. That caused this, and today we've got a little bit of more follow through to the downside here for the Euro Swiss. Very bearish for the Euro Swiss. We still haven't seen the intervention from the Swiss National Bank, so who knows where that bottom may be for that currency pair. Dollar versus yen on a daily chart. The good news from this, and I'm going to zoom in here, is that the 100-day moving average continues to hold support. You can see here on the chart very clearly that the market has not been able to close below that blue line, below that 100-day moving average for 1, 2, 3, 4, 5, 6, 7 days now. And that's a positive for the currency pair. The unpositive for this currency pair is that the ranges are very narrow here. We use the 72 level as basically a high for this week. We could not get anywhere near this 200-day moving average, which comes in at 91.65. But as long as the price can remain above this 100-day moving average here, the buy still remains to the upside from a daily perspective, with a test perhaps of that green line coming next week. But we got to stay above that 100-day moving average on the daily perspective. Let's take a look at the hourly chart, and this is telling us that the market is really in a conundrum here. We're trying to figure out which way we want to go when the 200 and the 100-bar moving average converge with the price. That's what I call three's company. What happens when three's company? The three's a crowd, right? And so one of them has to move. Which one's it going to be? It's going to be the price. So which way is the price going to go? Either to the upside or to the downside. What's going to be the clue to the upside? If we break through this 90.72 level, that's going to be the clue to the upside. If we break through the 50% retracement at 90.13, if we break through the 100-day moving average at 90.07, that's going to be a clue to the upside for that currency pair. Watch it closely. Watch those levels. Watch this 100 and 200 and look for the break either to the upside or down for conversion. Finally, dollar Canada. Are we going to parity? Not today. Take a look at the hourly chart. We went right down to the test. It's trend line. 1, 2. Oops. I moved that 3, 4 different times. The market came down to test the trend line, and the market bounced off of that level. We are heading toward the. I moved my Fibonacci here. Let me put this over. Oh, messing up. Control yourself, Greg. We are moving up toward the 50%, toward the 100-hour moving average. That 100-hour moving average currently comes in at the 101.88 level. That's going to be a topside resistance. That's a 200. The 100 is at 101.41. We got to get either above that or below that in order to push the bias to the upside or downside. That's my weekend report. Everyone, have a great weekend. Bye-bye.